Welcome to Talk Tickers. Today, we are diving deep into CrowdStrike's latest earnings report for their fiscal third quarter. And let me tell you, they delivered a fantastic set of numbers. But the story here is a little more complicated than what you see on the surface. So, let's get right into it.
So here's the central mystery we're going to unravel today. CrowdStrike beat expectations on pretty much every metric, and they raised their guidance for the future. I mean, normally, that's a one-way ticket to the moon for a stock, right? But in after-hours trading, the stock basically went nowhere. It was flat. The big question is, why?
To really understand that puzzle, first you have to appreciate just how strong this quarter actually was. Let's take a look at the numbers.
All right, starting with the bottom line. Profitability. Non-GAAP earnings per share, or EPS, came in at 96 cents. That's a solid 2-cent beat over what Wall Street analysts were predicting. A really good start.
Then you move to the top line. Revenue hit $1.23 billion. That's up a healthy 22% from the same time last year, and it also sailed past the consensus estimates. So we're beating on earnings, we're beating on revenue, the good news just keeps coming.
But this is the number that really gets investors fired up. Net new annual recurring revenue. Basically, it's the new subscription business they signed this quarter. And it grew a jaw-dropping 73% year over year. I mean, wow. This signals a massive reacceleration in demand, and it shows a powerful rebound from that outage incident they had last year.
So let's just put it all together here on one screen. You can see it plain as day. A clear beat across the board. Revenue, earnings, and that absolutely explosive growth in new business. By any measure, this was an exceptional performance. And that really sets the stage for what management had to say about it.
Okay, so the numbers are stellar. We get that. But what's the story behind them? Well, on the earnings call, management laid out a really clear narrative to explain all this momentum.
They pretty much boiled it down to three key things. First, the whole AI revolution is creating a bigger playground for hackers, which is forcing companies to spend more on security. Second, customers are getting fed up with juggling dozens of different security tools. They're simplifying, consolidating everything onto CrowdStrike's single Falcon platform. And third, the business has completely bounced back from that major service outage back in July 2024, with demand just snapping back stronger than ever.
And this chart right here, it just brilliantly illustrates that whole platform consolidation story. I mean, look at this. Nearly half of all their customers are now using 6 or more of CrowdStrike's modules, and almost a quarter are using 8 or more. This shows it's not just about getting a new customer in the door, it's about growing with them over time, which is just incredibly powerful for the business.
And hey, don't just take my word for it. To put a final point on it all, CEO George Kurtz himself didn't mince words on the call. He called it, and I quote, one of our very best quarters in company history. You know, that's about as strong a statement as you can get from a CEO.
Okay, so the quarter that just ended was phenomenal. But what about the future? Because that's what Wall Street really cares about. And this is where the story gets even more interesting. Management didn't just meet expectations for their outlook, they blew past them.
And you can see that guidance right here. For the next quarter and for the full fiscal year, their new targets for both revenue and earnings are comfortably above what analysts had been modeling. It's the classic 1-2 punch investors love to see. A beat on the results and a raise on the guidance.
Which brings us right back to our original question. The historic quarter, a super bullish outlook. So why was the stock's reaction so blah? The answer really comes down to one word: expectations.
See, context is everything here. Coming into this earnings report, CrowdStrike's stock was already up over 50% just this year. That's not just beating the S&P 500, it's absolutely crushing the entire cybersecurity sector. In other words, the market wasn't just expecting a good quarter, it was expecting a perfect quarter. The bar was set incredibly high.
And that creates this core tension for investors. The bulls are pointing to that stunning 73% growth in new business and saying, see, demand is back and stronger than ever. But the bears are arguing that with the stock already up so much, a great quarter just wasn't enough. The market needed an absolutely explosive, earth-shattering report to justify pushing the stock any higher. The flat reaction suggests the results were, well, just in line with those sky-high expectations.
So, with all that in mind, how should we be thinking about CrowdStrike stock from here? Here's our official call.
So here's how we see it playing out. For Q4, we fully expect the company's momentum to continue. They'll probably deliver another solid beat. The price action, though, that's a different story. The stock is now in what we call a show-me phase. Flawless execution is now just the base case to justify the current premium valuation. That means the stock will likely trade sideways for a while.
And all of that brings us to our rating. We are initiating coverage with a market perform rating. Now let me be very clear. This is not a knock on the company. They are executing brilliantly. This is a call on the stock itself. At this high valuation, we believe the stock will perform roughly in line with the broader market, because all that spectacular growth is now, we think, fully priced in.
And of course, we always have to end with this crucial point. This analysis is for informational purposes only. This is not financial advice.